Hello, if you've looked at salary sacrifice cars as an employee, then what you really want to know is how you can get the biggest savings from the scheme. Now what we're going to do just today is take you through how this works. I'm not going to take you through it myself, I'm going to pass over to my colleague Amy. She's really the expert in getting the biggest savings from the scheme and the type of product you need to choose to generate the largest savings for you.
Hi, I'm Amy and I'm the product manager for our employee car schemes. Today I'm just going to talk to you quickly about how our salary sacrifice car scheme works. So salary sacrifice is a way of exchanging a portion of your gross salary in exchange for a benefit. So in this case, it's a car of your choice. You pay for this car through a deduction from your gross salary. So that means that you can make some savings on your income tax and national insurance contributions. The scheme can save you time and money. Time because we handle everything for you, from arranging your insurance to booking all of your services. And money because if you choose the greenest cars on the scheme, you can make the biggest savings. You can save up to as much as 45% on the scheme, but that depends on your salary, the value of the car and the CO2 emissions. And because it comes through your employer, you do have to pay a little bit of extra tax on it as well. The key to getting the most savings out of the scheme is to choose the lowest CO2 cars. The lower the CO2, the higher the saving.
As Amy said, our scheme works best with ultra-low emission vehicles or pure electric vehicles. But what does that mean in practice? Now, it may conjure up images of a Prius or a milk float or something of that nature, but ultra-low emission vehicles nowadays are everything from a large 4x4 with a battery pack and a petrol engine as a backup, through to pure electric vehicles like the Nissan Leaf, which a lot of you will have heard of, or even the Tesla, an £80,000 supercar that can do 0 to 60 in 3 seconds. There really isn't a compromise nowadays if you go for ultra-low. The savings are huge. With salary sacrifice, you do pay company car tax, and that does erode the savings. But with ultra-low vehicles, that car tax is tiny. And plus, if you look at your fuel costs, an ultra-low emission vehicle like a Nissan Leaf, for example, can have running costs of just 2 pence per mile. Huge savings for you. If you're not quite sure to go to that level of pure electric, and the new Nissan Leaf will quite happily do 200 miles between charges, you can go for the hybrids. So a hybrid will do about 20 miles around town on pure electric. And it's really, really good when you're just starting around in traffic and doing stop-start trips, which normally would push your fuel consumption through the roof when you have a traditional vehicle. And if you do have to go further afield on motorways or for longer trips, you do have the reliability of just a diesel or petrol engine by the side, which the vehicle switches to automatically.
There's no deposit to pay on the car, and there's no payment to hand the car back at the end of the contract either. So you can get a brand new, fully maintained car all for one low monthly payment. And that payment doesn't just include the cost of your car, but also all of your running costs as well, everything except for fuel. So the payment that you make covers your tyres, maintenance, servicing, road tax, roadside assistance, and fully comprehensive motor insurance. So what are you waiting for? Even if you're not looking for a car right now, contact us today to be added to our newsletter so you can receive information about all the newest product and any special offers that we have.